Hey, Dr. O, every Monday at the Center Square, your Everyday Economics column runs. Last week, of course, you focused on the Federal Reserve Chairman Jerome Powell and his impending comments. And of course, those comments came out. We're going to do a separate episode in reaction to the Fed's decision to hold the line. What do you got on the calendar for the week ahead? What are you looking forward to?
Why don't we talk about, because I'm proud of myself. Why don't we talk about what I got right this week?
All right, let's take a victory lap with the bit man.
Look, the bottom line is we knew what was going to happen. And I feel pretty confident that despite the fact that, the data is coming in, sometimes weak, sometimes hot, and that people are like, well, this is confusing. There's a trend. And that trend tells me consumer spending is weakening, growth is easing, if not to use the word weakening again, right? You look at the Atlanta Fed GDP now figure; it's in negative territory. I don't think GDP is fallen below GDP growth. The growth rate of GDP has fallen below zero, but I think we're very, very close to a U.S. economy that looks like it's stalled in the first quarter. The housing market coming in. So retail sales came in weaker, than expected. They rebounded, but weaker than expected, from negative, right? From a decline the previous month. Housing starts was kind of positive. We saw a rebound in housing starts. That was unexpected. But I don't think that's going to stick. If you think about the number of homes that are already under construction that are coming on the market, if you think about the fact that despite declining mortgage rates since the start of the year, we haven't seen a ton of, foot traffic hasn't increased all that much. I think a lot of the uncertainty is holding consumers back. Now, I'm hopeful that we're going to see homes moving faster, later in the spring. Existing home sales was also somewhat positive. But we also learned that a lot of the sales came at the higher end of the income distribution. The people kind of wealthier home buyers,
right.
Essentially.
People with money were
who can kind of afford
ahead.
to still move in the current environment. So all to say that basically kind of the median income household is kind of squeezed. Right. And a low to medium income household is squeezed. And it's squeezed because there's a ton of policy uncertainty. There's tariffs that are pushing, prices, that are holding prices higher. Right. Even though this inflation has been kind of slow, so much slower. Right. There's a labor market, businesses are facing this uncertainty, are basically pulling back, not hiring. Hiring rates are at the lowest they've been in a long time. Worker confidence is plunged. People are now moving from job to job. Very low residential, labor mobility. You see it also with residential mobility. All of those things are weighing on consumer confidence. You're seeing this slowdown coming. Mm-hmm. And it's because people are not feeling very good about the economy. When you add to that the fact that the stock market is on track for a fifth week straight decline. Okay.
Yep.
There's the wealth effect. If I don't feel really well about my portfolio, I don't feel wealthy. I see my 401k, moving lower. I'm not going to go out and buy a new car, a new house. I'm not going to go and spend a lot of money. I'm not going to buy a new house. I'm not going to move. I'm not going to do anything. I'm afraid. And, I'm afraid. I'm sitting here. I'm usually very optimistic. I'm looking at my portfolio. I'm looking at the decline, and it doesn't feel good. And so most people are feeling like that right now. And of course, if you're a business owner, you're not saying, hey, I'm going to expand my operation to hire more workers. You're holding back. And so that's the concern on growth concerns, mm-hmm. right? Is what's weighing on confidence right now.
So let me ask you a question. I mean, and we're knocking out some episodes today. We're going to keep these tight, right? And we are going to talk about the labor market specifically. And we're also going to talk, as I mentioned, about Jerome Powell's comments on the economy as a whole. But what are you looking for next that might give you some ray of hope?
Next week we're gonna get the PCE.
Okay,
and that's a big one. because we're going to see whether or not inflation. Well, first, last month, personal spending had fallen last month. We're going to see if personal spending is still falling, right? Income growth had been supporting the economy, but in the first month of the year, you get raises, so you had that increase in the first month. You get, people getting Social Security, whatever increases, cost of living adjustments, all that stuff shows up in the first month of the year. We're going to get the second month this week. And we're going to figure out whether or not things are continuing to head in the right direction and whether or not income is supporting households or not. And then we're going to look at inflation and, are we going to see the price of food prices rising faster? Are we going to see energy prices holding people back? Are we going to see, that being a problem? I expect that core PCE should continue to moderate, but very slowly. We're kind of stuck, right? And the tariff situation is not really helping in terms of prices either. So, it's the textbook. It's really textbook economics, right? Price increases, growth slowing. We've been there before. We know how this is going to play out. Mm-hmm. And that's why, we got to be careful going forward.
Yeah. I appreciate your thoughts as always. And we're going to hit those two subjects in the next two episodes. So, more to come, this week, from the, Orphe and me at Everyday Economics.